That's the start of the week. We did have this opening range gap start of the week, so I'm going to draw that up. We did play around a good bit in that through the week. That kind of seemed to be like the focal point of the movement through the whole week. If you guys got questions, anything like that, please do post in the chat. That way I can try to answer them. I know there's a few guys in here who just joined. I was really hoping John Trader would join because gave me his whole life story on how he needed help, and it's kind of unfortunate he's not here right now. One thing I did on Friday, this is something I want you guys to pay attention to. It made knowing that the market was going to go up in the beginning kind of easy to tell, because I know y'all have heard us discuss inefficiencies in the market. Inefficiencies are volume imbalances, fair value gaps, inverted fair value gaps. I mean, stuff like that hasn't been tapped into, because as we all know, fair value gaps will and always will be eventually tapped into. It's just a matter of time when that will happen. So Friday morning, before market open, I analyzed how the movement we had all week, and it made it really easy to do, considering the fact that we're sitting at all-time highs right now. So there's really not much inefficiencies above that we have to really pay attention to, right? It's kind of nice. Now, this is the highest point we had, and that was on Wednesday. So what I want to do from there is look for inefficiencies. So we have this fair value gap on the 15-minute, but it was tapped into right here. And then we also have this fair value gap right here on the 15-minute, and it was tapped into as well. And that was on Thursday. Now, the only fair value gap that we had above on the 15-minute time frame that hadn't been touched was this one right here. This one had been tapped into Thursday night into Friday morning. And so this was the only one we hadn't touched. So if we were bullish into the day, I wanted to see it come up into the zone. This was my target for the morning on Friday morning. That's how I was able to do that. That's how I was able to make that much money that morning. So this was my target for the inefficiency that we had above. Now let me change the color. Just gonna make it orange. Now, let's look below, okay? So we have no fair value gaps that have been tapped into here. So that's all the way down into the lowest points right here. We don't have any fair value gaps that have been tapped into here. Of course, we do have sell side liquidity, which if the market was bullish or bearish, it would go for those areas too. But down past that, the next inefficiency we have below, that's a fair value gap that hasn't been touched, is this one right here. So if the market were to go bearish, if it had gone bearish on Friday, this is what I would have looked for. I wanted to see all this liquidity get swept, and then us to either tap into this fair value gap and close through it. And if we did close through it, we would have most likely seen this sell side down here get taken. But if you look back at midnight, so let's see, Thursday at 4 p.m., we closed at $23,003.50. So Friday at midnight, we opened at 22,968. So we closed higher. We opened lower at midnight, which typically, like I've told you guys before, means we're going to typically be bullish through the day. And so that was a good sign. Now, market came up, market opened here. We took out and we went straight into this inefficiency that I was telling you guys about. And it tapped into it, it respected it, didn't want it, and it kept playing between the opening week gap and that inefficiency for the whole day. So I mean, the main move you had, of course, was from here to about right here. Otherwise, probably a lot of people got played with around this area. And so that was the main move on Friday. Now, if we drop down to the 1 minute, we could go to the 5 minute. Now, my interest, I'll show y'all the one. Was it? Forgot what I drew out that caused me to enter. So you got 9:30 right here. Now I'm pretty sure on the 1 minute there was an order block that I was watching. Yeah. So me and Humble actually, we took the same trades on this. So let me open up. If we go to regular trading hours, this is something I've taught you guys as well. That's okay, cool. I confused myself for a second, sorry. So we closed at 23,350, like I was saying, and I know it can be confusing because of the color candle, but we opened down here, and the reason it's black and we didn't open up here is because we did open lower, so that's why it's lower. But we opened at 915, which is right here in this area. So me and Humble took the same two trades. We saw it come up, and it tried to attack the 50% mark of the opening day gap right at open, and it failed to do so. And I think I remember telling Humble my target was the 8:27 a.m. candle, which was from a few days ago, if I remember correctly. It was like 881. Sorry, I wish freaking TradingView would save like, oh, this actually might help if I go back to electronic trading hours. That changes things for you just a wee bit. Um, let's see. Yep, here we go. So I was correct, yeah. So my target was this 8:27 a.m. candle because that was the lowest point. So I took my trade from 959 when I saw it not able to close through this, and I shorted, and I shorted it right here, 881. Afterwards, though, we did see the rejection off of a order block, which if you go to the 5-minute, I had this order block that was drawn out right here. And so since we respected that, I went long and I wrote it up from there to the top. And then my day was over at that point. Couldn't complain about that one bit. So those were the two trades I took that day. What ticked me off though, of course, was I think I was like $100 short of each account that I had because I needed like 100 more per account. So I took this drop right here once I saw it take out this sell side, and I targeted it just right there. Just a quick in and out for $100 extra on each account. So I did take 3 trades. But that was kind of what I was looking at. That was my thought process on the day. Does anyone have questions on that, like specifically? Is there anything I can answer, like based upon that? Did anyone have any questions about Friday in particular, like anything at all? If not, we're gonna do a breakdown next of the whole week. So going once, going twice. Oh, Muhammad and the other dude's typing. Okay, wait, we'll see what they say, what they ask real quick. What did you say? I knew we'd be bullish once we went up at midnight. Okay, so it's in my lessons page. Typically, and it's not gonna happen all the time because of course you have market manipulation, as we all know. Things can happen in the market, Trump can post a tweet, news can hit, stuff like that. But on average, more than average, most of the time, let's say if the market say we closed at 4 p.m. and don't look at the time frame I'm going to show you at the bottom, okay? Don't look at that at all. Let's say we closed here 4 p.m., right? And then let's say this is midnight up here. So we closed lower and opened higher at midnight. So then the next day, let's say this represents the whole day. The next day would be bearish because we opened higher at midnight. Now, then let's say this. So let's say we closed here and then we opened here at midnight. So we closed here at 4 p.m., opened here at midnight. And so the next day would be bullish. And that's a very highly likely probability that that will happen every time. And it helps kind of set your bias for the day. But also going through and looking at the market like I was showing you guys a second ago on the 15-minute, looking for any imbalances we have, any fair value gaps above and below that we haven't tested. Like I was showing you on this one, and like when I was showing you on this one up here. We have since we opened lower at midnight, okay, so we should be bullish through the day. Okay, well, what's the closest inefficiency we have? This one right here. And so that's why I drew that. That's why my ultimate target was this fair value gap that was up here on the 15-minute. I wanted to see that tapped into because we should be bullish through the day. And then and if the inefficiency had reached for, it'd be that one because that's the nearest inefficiency we have. And so vice versa, like I said, open lower. If we close at a certain point and we open higher at midnight, we'll be bearish through the day. If we close at a certain point, open lower at midnight, then we should be bullish through the day. And it kind of helps set in stone, set a thesis, set a bias of what the day should be like. And it's very accurate. It's helped me a lot in my trades, but of course, don't marry that bias. Anything can change up on you in a second. And then let's see. Sir, he took a trade right when the market opened. That is around 6 p.m. right after when the market opened. After. What you mean there, buddy? Mike, do you think you know what he means by that? No, you good. Are you talking about 6 p.m. at night? I don't trade 6 p.m. at night.
Yeah, I guess he's trying to figure out if you mean midnight Eastern time or like right after the market gaps when it reopens.
Okay, when did you take positions? Um, so I mean, it's really what the market shows me. Yes, correct, when it reopens. Okay, so no, but what about when it reopens? What do you mean by that? Do you think he's confusing with like the close and opening at midnight, Mike?
So you know how like if you're on the East Coast, it'll close at like five
Yeah,
o'clock and then reopen at 6,
yeah,
and then you
that's
can get
me.
like a gap. Is that what you're talking about with
Yeah.
the midnight thing, or you mean like actual midnight?
No, no, no. I mean actually midnight. So like, let's do this here. Um, so we closed. So so like the stock market, options market, all of that closes at 4 o'clock, right? And that's Eastern time. And so trades stop for them, but of course futures run for 1 more hour. But we don't count that 4 to 5 o'clock. We don't. We ignore that. We count when the market closes for everyone else. So the market closed at 4 p.m., right? And so that means stocks stop trading, no more stock trading, no more options trading, nothing like that. And so that means it closed on this day, Tuesday, at 22,675, right? So midnight, right? And this is why I say it's not always 100% accurate because this is going to show you right here. Midnight we opened higher. Um, but the thing is, another thing we did though, and this is typically another reason why, we took sell side before open, which is why we took buy side at open. But so what I'm talking about is 4 p.m. right here. Where did we close at? Midnight. Where did we open at? If we opened higher at midnight or if we opened lower at midnight, it can kind of set the tone for the next day. That's what I'm getting at with that situation. If that helps.
Yeah, so you actually took that first trade like early in the morning, like 1 o'clock in the morning. Is that what you did?
Which one?
Like on Friday, that first trade, like you know how like you said you and Humbles were looking for it to go down to 881.
Oh, no, no, that was Mark Humble attacked a higher number than that. I took it right at open. So I went so right before market open, I opened
Oh,
up
so you're
regular
talking about
trading
like
hours.
you're talking about like 9:30 in the morning. That's when you
Yeah,
took. Okay.
I took this right at 9:30 as you can see. I took it this very second candle. So at 9:31 I took this trade from 9:52 down to 881. So I was in from there to there. And then once I saw it respect that 5 minute bullish order block, that's when I wrote it back up to that fair value gap that I showed you guys that I had drawn.
Yeah, we
But I
I kind of get what he was talking about because I was also thinking you took that trade at like in Asia. That first
oh
trade
no 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 no
was in Asia.
no 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 no, I don't trade the night sessions anymore. I used to do that just so I wouldn't have to trade the next day. But then I started realizing your risk versus reward during night sessions is not worth your time. Unless you're trading like a crazy night where Trump posts something or we have some crazy news and the market really drops or pops, it's really not worth your time because the liquidity is so low, the trade volume is so low that you're just going to have random jumps here and there all over the place and it's not going to follow strategy like you would hope it would. So you're going to risk $400 or however much your risk is and to make maybe a few $100 or you may get lucky. And you'd have to stay up all night just to watch it, you know. But no, so I took that. I'll draw it back out again for you guys. So I had the 15-minute open pre-market. I drew out the nearest inefficiencies that we had, which I need to actually go back to regular trading hours. The nearest inefficiencies we had were this fair value gap right here on the 15-minute, and then the nearest inefficiency we had below was was this one down here. All the others had been tested above. We didn't have any fair value gaps, and you can follow it all the way down. We have no fair value gaps that got tested. So if you go from this lowest point over, that means all this stuff right through here has been tested. Now you go from this lowest point right here over, because that means it's wiped out all this stuff that's right here. So the next inefficiency we had below was this one right here. And the funny thing too is there's an order block right here, which they respected right there, but that doesn't even matter. So we had this inefficiency on the whoa. We had that inefficiency on the 15-minute, and we had this one. So if we were to go bullish, which was my thesis on the day, I wanted to see it tap into this. If we were to go bearish, I wanted to see it reach into this because those were the only next inefficiencies we had below, and the market would have came down. It would have wiped all this right here, and then at this point it's close to these, it'd wipe all this, and then it would tap into this more than likely. And we'd either see it close through or we'd see a rejection back up to close the new day opening gap. If not, we would see it wipe all the way down into here more than likely. But like I said, I was bullish on the day due to the fact that we had opened lower at midnight. Um, Back to this. So let me show you that one more time. So let's find it. Yeah, so we go from the 11th. Where the heck's the 12th? Am I blind? 11? Why do we go from the 11th to the 13th?
Oh, because the 12th was Saturday, right? So
Oh my lord, I'm retarded. Whoops. Okay, so check this. So then we go to the 4 p.m. 4 p.m. we closed. So we closed at 23,015, right? And then midnight which is right here, we opened lower. So we opened lower than where we closed at, right? Which typically means you're going to be bullish through the day, which is exactly what we saw. Then of course, I mean, and we did that. Of course, we had our ups and downs and everything, but the the primarily projection through the day was bullish. Um, and so that's what helped me set my thesis on the day. I wanted to see how the market would react to the new day opening gap, and if it closed through 50% of it, typically it's going to close through all of it. It didn't. It wasn't able to reach the 50% mark. It was literally like maybe $2 to $3 off from it. So when I saw it rejecting this 50% mark, I took my entrance. Wait, it's down here. See, we were literally almost there. So the high that we had right there was 958, and the 50% was 959. So we look for SIBI FEG at the high level, and it's not just fair value gaps though. You want to look at volume imbalances and stuff like that. But I mean, for right now, man, if with you just now learn with you learning ICT and kind of getting into it, I wouldn't try to really predict where the market's going to go. I've been doing this for a while, and I've gotten to a place where have the time and the knowledge and the equipment to be able to have a better understanding of it. Right now, your primary focus should be, okay, are we in a bullish uptrend or are we in a bearish downtrend? And then you want to attack the nearest buy side or sell side that there is. Don't go for the big, ultimate, huge moves. Go for the small moves to develop the consistency, to develop the discipline, to develop the understanding of how it all works. And then once you get a better understanding, a better grasp of it all, then go for that. So like you can see like right here. So you saw we rejected this, and so you could enter a trade right here, and you could attack right here, or you could attack down here, or right here, and you would have won that trade. Now you saw that we respected this fair value gap right here, so you could have entered here, you could have attacked right here, attacked right here, attacked right here, you could have even attacked right here. But you just need, we're not you don't need to go for the full entire move right now. It's better to have good risk management, good discipline, good consistency, develop yourself, develop your strategy, develop the understanding, and then start going for the longer moves. Because that's what I've been doing for the last 7 months. I've just now, over the past 2 to 3 months, have been going for longer plays. I went for the nearest buy side or sell side, and sometimes I'd push the level a little bit further and try to go for the next one over. Um, and if you really want to, bro, I mean, like you could even do something like this, and I would suggest doing it with micros and do it when you get comfortable. You see it, respect this fair value gap right here, enter the trade, fair stop loss goes below it. And then you could take 3, 4 micros, whatever you're comfortable with. I know some guys are only doing 1 or 2. I always suggest that until you understand it better. But you could enter here and you could set one partial here and then full take profit here. Or you could set partial here, full take profit here. And
That's what I
so
do.
just that way
I
you
do
can
it like
kind of
that.
see, yeah, yeah, that way you can see the trade play out and kind of you'll learn to trust yourself and trust the strategy more. Don't be the person that takes one mini or one micro and tries to run it the entire way. That's not a fun situation to be in because it can flip up on you real quick. I've been in trades before where I was up thousands of dollars, and then you have this one candle that decides it wants to drop 150 bucks, and you get wiped out of a trade completely, like right through here. You have stuff like that happen, or I think, or these two candles, like this two candle would completely ruin someone's day. Because that's a drop from what 957 down to 878. So that's a $80 drop. That's what 1,000, almost 1,500 bucks in a drop right there. So it could ruin your trade completely. So always set partials, move your stop loss into profit when you can. I'd rather make 100 bucks than lose 500. That's a better day on your end. You'll be happy you did that. You know, instead of gambling and hoping that the trade plays out to your favor because you're running one contract. Um, But that's what I typically recommend to people. Definitely do that. Start with micros. Develop your strategy. Develop the strategy. Develop like your understanding of it. Definitely look at the lessons page that I have in here. It will kind of explain things more in depth. That way I don't have to go too far over everything with you. There's a lot of videos thanks to Mike and him recording them. And then there's also drawings that I've done and explanations on there explaining how to trade a bullish market and how to trade a bearish market. And then there's photos after that to kind of show you an explanation, example. Now, does anyone have questions on anything, like in particular, maybe something that's confused you this week, something you're trying to understand more, anything like that? Oof, I remember that happening at night. I wish I could have been a part of that. See, that's one of those nights when you get lucky if you're trading at nighttime. You don't ever really see that crap. You typically see this bull crap right here. Something like that, where it's just a whole bunch of consolidation. Or really this. This is typically what you see just all over the place. Maybe a small drop, back up, back down. You don't typically see something like that. Oh yeah, that was him announcing the 25% tariffs, right, along with the other ones he's doing. Gotta love Trump, man. He's on something right now. But I mean, I'm not gonna complain about it because he helps us have good days in the market. Now, let's kind of go through um, this week's movement. So we opened here with this weekly new week opening gap, of course. Now we rejected this area, which you could always use this fair value gap right here if you wanted to. That's one of them. So that'd be your bearish fair value gap on a 15-minute. You also got this inversion that's right here, which helps even more. So there's two confluences right there, um, which I've seen my boy Mike over there doing more lately. Makes me happy. Um, and of course you got some order blocks too. Let's see if there's any actually through here. So in this big drop that you showed us, you will let it do what it wants to do in the right. Yeah, dude, I try not to look at the market through the night because it'll make you want to trade it and it's not worth your time. But in the morning, typically about 8:45, I'll hop on. I'll look at the night's movement, and that's when I'll kind of draw out any inefficiencies in I have. Look and see how we've taken buy side, sell side. Look for any equal highs. Look for any equal lows, relative highs, relative lows. Draw that stuff out, mark it out. Kind of try to develop my bias for the day where I think the market will want to lead to, based upon all of that, and then go into my trade at 9:30 and see how it happens. I typically don't always trade at 9:30 because typically at market open you have the manipulation. And I posted a photo the other day of it too. I tagged Mike in it because I remember us talking about it before. You'll see it take buy side or sell side and then it just dump the other way. It'll manipulate and fake everyone out, collect liquidity on them, and then it'll go its true direction. Um, and I love seeing that happen over and over and over again because it just confirms that that's what happens at open. You have consolidation, manipulation, and then you have true direction. So that's typically how the market will move is consolidation, manipulation, then true direction. Which typically before market open is when you have the consolidation, then at market open for the first 3 minutes you have manipulation, and then after that, that's when you have true direction, where the market's intention for the day is to go. Typically how it plays out. It's not always like that, but and that's just due to the fact that you can't always win. Not everything's always going to be right. There's too many factors that play into the market, but the whole purpose of this is to have a more of an edge, give you a better edge, better understanding. So Monday open, we rejected this inverted fair value gap right here. That was bearish. We also rejected the bearish fair value gap that was right there. We do have an order block that's right here in this area too that it tapped into on this first candle, which would have been a good confluence to get in. There's your three right there, Mike, and you could have shorted. You could have shorted down into here. Um, but from there we did. Let's see. There's no fair value gap right there. We played around a lot back and forth in this, and of course you got an order block that's right here that this played into. It's a bearish order block. Yep, and it continued to play into it into all these areas too. Now you do have this bullish order block that's right here that the market played into as well. Didn't go that far. And this is typically what I like to do on my Saturday mornings, but I had to freaking move a couch yesterday, and every dumps waste management place decided it wanted to be closed. That was awesome. 5 hours of driving around, but it's okay. We finally found the place. So from there, the market did tap back into this. Now it did come back up, and it tapped into this fair value gap that's right here. Before coming back down. Now, of course, we got to see why it rejected through here. Typically, there's a solid reason, and of course, there it is. You got a bullish order block that's right through here. And then the market came down again, and just like earlier when I was telling you about why it rejected right there, and it's due to that. We have another bullish order block. Now, typically higher time frame stuff is going to have a stronger confluence than lower time frame stuff. Doing this on the 1 minute though, trying to show you guys the day's movement on the 1 minute is a lot more difficult than showing you it on the 15 minute, which is why I do it on the 15. Also, Humble taught me to do it that way, so that's why I continue. Now, we did play back up into this bearish fair value gap on the 15 minute, rejecting it back down. So, but before that, we did tap into this bullish fair value gap, which we did again right here. If I don't draw all over the place. And then we tap into this bullish order block that's right here. We're coming back down. Tapping into this bullish order block that's right here. Came back up, tapped back into this bearish fair value gap. And of course, you can see that right here, we tapped back into a bullish fair value gap as well. I think I screwed up and I just called this a bullish fair value gap. That's meant to say bearish. Now, somewhere through here in this candle, because it's a 15-minute candle, there is a fair value gap. That's why we stopped right there. So I don't really have to draw it out for you guys. But there is that's why we stopped in this area before coming back down. Now, of course, we do have a bullish order block through here, which is why we tapped off of it before going back up. And this is a good thing for you guys to do. Kind of helps train your eyes to notice and spot these things. That way, when you're on your own, you will be able to trade and see these and catch stuff before it happens. Now we came back up, tapped into a bearish fair value gap. We went back down. Now, technically, we played around all through this bullish order block, and we even tapped into this one that's down here before we came back up. tapping into that. No, I'm gonna go ahead and assume that we tap back into whichever fair value gap that's in this area because as you can see, they stopped at the same point basically. And then we had a lot of consolidation right here before we shot up that morning at market open, taking all-time highs again, which we swept just right through here by a few more dollars. There's nothing up here to show a rejection other than the fact that we took major buy-side liquidity, which is why we rejected and came back down. Then I think this was the day that, if I remember correctly, because yeah, sometimes fair value, a lot of times fair value gaps do become IFVGs. You don't gotta call me sir though. I'm only 27. You good, brother? Yeah. No, they do become inverted fair value gaps. They're all over the place. So what do you mean though by that? We really had a tight range this week. Yeah, like a $300 range. But we did take major buy side liquidity through here, and we did come back up after tapping into that bullish fair value gap. We tapped into what was now an inverted fair value gap. But we also had a bearish one too. That was right here, which I love these setups. That's a perfect setup. For how long have you been trading ICT? Okay. Are you talking about the ICT mentorship for 2023? Okay. Um, I mean, you can trade inverted fair value gaps if you understand them, go for them. But typically, like when I first started learning this stuff, I was told just to focus on fair value gaps before I start including inverted ones. But I mean, if you already have a grasp of them and understand them, then go for it. I'm not going to sit here and tell you not to do it. So if you get it, understand it, and can trade it, go for it. I'm not going to say don't do it. If it works for you, then it works for you and make it happen. Do what works, make it your edge. Um, Ooh, then it even did it again. Mike, I hope you took one of these. I hope you took this one or this one because that's just beautiful.
Yeah, I took the second drop. I got the second drop on
This
Thursday.
one?
Yeah.
Awesome. That's awesome. That makes me happy to hear. Because I know you've been practicing a lot with using multiple confluences.
Yeah, I
So
didn't I didn't
that
even
brings
use
me.
fibs for that. Like I saw all those gaps and like on lower time frames there was like an order block up there, so I just put like a limit order in and like I top ticked
Yeah.
it.
Heck yeah, man. Does it not scare you to do limit orders?
Yeah, it does. Like I only did two micros. I had a really
Yeah.
tight stop. I had a 10-point stop just in case.
That's beautiful. That is beautiful though. I can't sit here and say crap about that. That's gorgeous.
I wouldn't
Some
do
people
that
do way
on
too.
like a funded account. I wouldn't do it, but it was eval, so it's like
Yeah, a
you
little
can
more
gamble a
risk.
little bit on the evals.
Yeah, just make sure that doesn't carry over into like your actual trades when you get the live account. That's not a fun day when you do that. I did that a few times. I was like, well, if I did 4,500 on my eval, I can easily do that again with 15 contracts. Blown account, blown account, blown account. Crap. And that was on TPT, and TPT's like, well, you can reset it for $1,500, and that way you don't have to do another eval. I was like, yeah, and that's not happening.
Oh, they let you
I'm good.
reset the fundeds?
Yeah, you can reset a funded. A 50K is like $600. 150K is $1,500. I'm not sure about a 25K. I've never done one of those. That's just not. I don't like the drawdown that's on it. It's a little bit not enough for me. I like to have a little more wiggle room because like if you make one mistake on a 50K or a 25K, you're kind of in a hole at that point. But yeah, you can reset them. It's kind of nice. So let's see. There's another order block. We're almost already done with the week at this point. Because, I mean, all this stuff is already basically drawn up. You don't really have to do much. Of course, you got this big old fair value gap that the market wanted to play around in. I think this is actually the last thing I need to draw. Yeah. Well, there's the whole week in a recap. Easy peasy. So this is what I'll do though. And you can do it on the 1 minute if you want to. You're just gonna have so many more boxes. That's the main reason why I don't do that. It's just a whole lot more boxes. 15 minute, you still get the understanding. It still teaches you how to spot things, so you just don't have to draw nearly as much. Um, I mean, really, this workshop is guided upon you guys. So I mean, ask away on questions. I'm here to answer things that y'all want to learn about that y'all may not understand. I don't really have like a game book to on stuff to teach you guys because I would have to talk to you each individually to know where you're at, to know how I should help you specifically. Because what one person might be ready to learn, another person might not be, you know? Um, so I mean, like, is there a bike? I'm not sure how to pronounce your name, brother. Sorry if I botched it. Do you have any questions, my dude? Like, is there anything I can answer for you? I know you're in a completely different time zone than us, so I appreciate you being on. I'm guessing it's probably like afternoon for you at this point, getting close to nighttime. Or Jan, do you have any questions, man? Like, feel free to ask. It's no hassle at all. I do these things to help y'all out, you know. I know Mo and Mike been here a little bit longer, so they kind of understand basically everything I'm showing you guys right now. Um, uh, so how to handle intraday accounts? Oh, dang, Jan, you're on the other time zone too. You should add homeboy right here. Y'all might be in the same country. Sorry if I said your name wrong as well. Not trying to. When you say how do you handle intraday accounts, are you talking about how do you handle intraday drawdown accounts? I don't like intraday drawdown. I like end of day. Well, I mean, oh, you're in India. Cool, dude. That's what's up. Well, welcome from the USA. Nice to have you here, brother. Um, I mean, the best way you avoid do drawdown at all, of course, get out of it. Whatever your drawdown is, once you pass that, then you don't got to worry about it anymore. But I mean, your TP, bro, is the most important thing. Don't let a trade just keep playing because it goes from your highest point. Um, I I didn't struggle. Oh, there's Riz. What's up, my man? Um, Drawdown hasn't really. It was an issue for me in the beginning because I wasn't taking proper setups. I wasn't taking proper trades. But of course, through time, like you start, and this is why I have you. I want you to like draw this kind of stuff out on your charts, is because it teaches your eyes how to spot these things, and it'll teach your eyes how to spot it as it's playing out. Then you start being able to see better setup trades, better A plus trades. You start understanding the market and everything like that, and you won't stress about drawdown as much. The drawdown's there for people who are taking more risk, who aren't waiting for proper setups, who are just hopping in just to hop in. That's why they have that there because it takes out those people. It gets rid of them, and then that person has to go buy another account. But I mean, if you trade in smart, man, it's all about just sitting and waiting. I don't know if you trade the New York session just because of your time zone, but like my favorite times to trade are 9:45 a.m. Eastern time and 10 a.m. Eastern time. One of those two time frames, you're going to have a reversal, and it happens. I don't like giving an exact number, but I typically see it happen about 80% of the time. I don't, and the reason I hate giving a specific number is because I don't want to sit here and tell you you're going to have an 80% win rate chance if you take a trade at 9:45 or 10 o'clock. I don't want to say that. But when I'm sitting there watching these play out, it's typically 80% of the time around there that I do see a reversal happen at 9:45 or 10 a.m. Eastern time. It's not every time. It doesn't always happen. And also the thing is you don't know how far it's going to go. Sometimes the reversal is huge. I mean, you're talking 100 handle move, 150 handle move. Other times you're talking 30 handle move where it doesn't travel far at all. But those are my favorite times to trade because that's typical. I can rely on that. Outside of that, if I see a move happen, um, after the manipulation at open or after it either rejects the opening gap or closes through it, and I'll look for a trade through there. But I'm sitting there and waiting, and I will sit there and I'll be patient and happy until I see what the market show me that it wants to do something. And if I miss it, I miss it. I'll find another trade. The market's not going anywhere, but you gotta develop that consistency. That's why I was saying like don't go for these huge moves. Go for the next high or the next low. Learn how to notice those and how to trade those and how to enter on fair value gaps, order blocks, breaker blocks, whatever it may be. Once you're able to do that consistently, then you can push for the next high or you can push for the next low. Once you're able to do that more consistently, then you can push further than that and further than that. Then you'll get to a place where you can start taking the whole move. And you'll be able to trust your strategy because you've done it long enough and you'll understand it from doing it long enough. It's a lot of repetition in this. It's a lot of seeing things over and over and over again because when you teach your eyes how to spot these things, then you're able to use it to your advantage because you're like, okay, I've seen this before and I know how this plays out. Okay, and so I'm going to enter here and this is going to be my stop loss here. And if it doesn't hit it, oh well, I'll wait for the next trade. And if it does hit it, then I'm going to trade to right here. And you'll be able to trust that. And you'll be able to sit in it and let it play out because you'll know that's going to happen. Um, but yeah, if and the best thing I tell you, man, is I don't know who you're trading with, but I would always suggest in the beginning, if you need structure, you need rules, Tradeify is going to be your best bet or Apex. I don't like Apex. The only good thing about Apex is they're cheap accounts, but they have so much rules. And they'll deny you on a payout just because they feel like denying you on a payout. Um, they're actually under a lawsuit right now. I forget why. But I mean, they'll teach you discipline, teach you how to not trade one day and make $7,000 and then every other day make $300. They'll teach you how to consistently make $500 a day or make $1,000 a day, however much your goal is. They'll teach you how to do that every day. That's what helped me. My first account was with Apex, and I was able to make it to my sixth payout where I withdrew all the money from it. After that, I haven't touched Apex since. I've been on take profit ever since. Take profit has end of day drawdown, daily payouts. The payouts hit my account within an hour of submitting it. Um, and it's pretty solid. The only thing is you have to trade for 5 days on evaluation, and you can't trade news. Those are the only two things. And there's only specific news you can't trade, which is like non-farm payroll and then like FOMC and I think PPI and CPI. Outside that, you can trade other stuff, other news reports. And it's not like you can't trade it at all that day. You can't trade 1 minute before, 1 minute during, or 1 minute after. So for 3 minutes during the news release, you can't trade. But that's about it. Um, so, like I said, I don't know who you're with, but I highly suggest when you get to a place where you're comfortable and you understand everything, I would go with Take Profit. They have been hands down my favorite people to be with. I have 4 accounts with them now that I copy trade. So I suggest it, highly suggest it. Um, Riz, you got questions, man? I know we talked a little bit. Is there anything you want to know on? I know you just got here. I went over the trades I took with them on Friday. Um, Kind of explained my thought process through it and why I took the trade. Um, and then I just did a a market recap with them too. So just the movement for the week. We were in a tight range this week, so it wasn't anything crazy. I mean, the lowest we were at was 780 and the highest we were at was 110. So I mean that's a 400 window, which I mean is a good bit of wriggle room, but pretty tight. Anything? Mike, hit me with something, bro.
Yeah, could you cover the first trade you would have taken on the 8th?
You want me to drop to the 1 minute for it?
Yeah, and like just do like a walkthrough on like your thought process that morning.
Okay. Starting for market open or what?
Yeah, you can start it from 9:30.
Okay. So there's from there. There.
Yeah, this is like one of those chop days, you know, so this is like a good example of like this would give us a good example of like what to take and what to avoid.
So I'd start 4 hour. Let's go there. Just for now. So that's Tuesday. So let's see. Monday we took sell side. Um, Tuesday we either take the high of the week or the low of the week, or we either make the high of the week or the low of the week. And same with Wednesday. So as you can see, Tuesday we made the low of the week. Wednesday we made the high of the week. As you can see, we didn't go any lower the rest of the week. And that's what I mean by saying that. I'm not saying we're going to take out and go lower than we did on Monday. I'm saying we make the low and we won't go past that for the remainder of the week. Same with this one. We made the high and we didn't go past that for the remainder of the week. That's what I'm getting at when I say we make the high of the week or the low of the week. Um, Okay, so I mean, of course, I want to pretend I didn't see any of this crap right here. So I see we took sell side on Monday. So Monday we typically take Friday's high or Friday's low, which we took Friday's low on Monday. All right, so next thing I'd go is I drop down to the 4 hour. Oop, go back. 4 hour is so different when you have everything already charted out. I mean, all the candles already in the way. So here's the eighth. The market's already open there. So you got sell side liquidity right there. That's 2 a.m. You got buy side liquidity right there. 6 a.m., 10 a.m. So that's when the day tip basically starts right there. wish none of this stuff was here, because then I could draw everything out and not have to worry about it. Okay, so 9:30 is see, what does it look like on regular trading hours? So when market would open, I would go ahead. Where did we close at here? 8:59. So we closed down here. And we opened 9:35 up here. Correct. I had a feeling that was going to be like that. Okay. Boom. Yeah, cool. Okay, market opens here. So if we wanted buy side, we would have, the nearest buy side we had would be up in here. As you can see, it failed to do that. It kept trying to push back this past this opening gap, or well, this opening point, and it failed to do that. It just wicked. Of course, there is a fair value gap right here that's bearish. So of course you wouldn't want to take a long entrance. So my target would be from there. I would enter here and I would target the 50% mark, which as you can see, that's what it did. Now, of course, it did go down fully and close, which is beautiful. From there, you do have an order block. That's right in this area, which you could have gone long there. And um, you could have attacked. I mean, I wouldn't have gone for the full thing. You could have attacked this buy side. Well, I would attack this one because these are relative highs right here. My TP would be around this area right here. If I were to enter down here. But I mean, you also do have. I mean, technically you do, but not really. It's kind of not something I'd always do. You have a bullish fair value gap right here. Well, hold on. Let's go back to regular trading hours. Cool. This just threw me through a loop. Hold on. I'm sorry, y'all. Go back to this regular trading hours. Was I just not in the right area? Was I looking at the wrong thing?
I'm actually confused on like how come the chart changes like that when you go from the regular trading hours
That's
to
what
the
just
extended. Yeah, like
that's what just threw me off too. I
yeah,
was like,
it
wait,
was like a
what?
whole different like chart basically. I don't know. It was weird.
That's why I was like, am I looking at the wrong thing?
Yeah, because when you go to the extended, it's like it looks like it went way higher than when it's on regular.
You got 9:30 right here. The market opens here. I mean, either way, look, so you have buy side right here. Market failed to take it. So it tried to push up, and if it went higher, it would have came up and taken all this right here, which you have relative equal highs, so it would have swept this. But market tried to push past it, stay closed below it. There's your first sign. Failed to take buy side. So what's the next opportunity? It's going to want sell side. So you could enter here or enter around this area. I would set your stop loss above this high depending on how many micros or if you're doing minis. And this is if you're getting in on a trade at 9:30. Trading at 9:30 is higher risk. There's manipulation at open. You never know exactly what's going to happen. So this is where experience has to come in. Now, but the other beautiful thing is look at this. Does anyone see a bearish order block right here? Market literally respected that bearish order block. Beautiful thing. So if you wanted to enter a trade right at open, you could have done that. You got the bearish order block that's right here because it's followed by all these black candles. You'd set your stop loss above this. That'd have been perfect too. 'Cause golly, that touched the very edge of that block. Um, and then your target for someone new who's new to this, target would be 50%. Now you could set a partial here if you really wanted to and go for the full close with your final TP being down here. Do I recommend it? Only if you're comfortable. I wouldn't have everyone do it because even me, I can't sit here and predict how far the market will go. So that's why I would set my full TP typically right here. Because the market will either it'll tap off the 50% and go back up, or you'll see a lot of this consolidation before we have the final move all the way to the downside. Now, I mean, of course, you could set your entrance here, stop loss up here, target 50%. Once it hits the 50%, then you can move your stop loss down to here with your full TP here if that's what you chose to do. Market did come down and take it, which is awesome. So we closed the gap. Now let's come back. Drawing these up. Go to the 5 minute. That makes life a little bit easier. Cool. That's why using sometimes higher time frame is a little bit makes your life a little more simple because otherwise you're gonna have all these boxes all over the freaking place. Wrong one. So you have this bullish fair value gap on the 5 minute. Now, if it closed through it, you would have more than likely seen it wipe out sell side down here and potentially go all the way further to there. But it tried to push past it twice, wasn't able to do so. If you come back up here, look at this. It tapped back into that bearish order block that was right there. You even though if you go to the 5 minute, you have this one actually now, which is different. And I mean, dude, it kept playing into it all day. Even into the next day, it did the same thing before finally closing it and going up. Um, but so typically, like when I'm drawing stuff up, I'll draw it up on the 15 minute or the 5 minute. Because if it just full on disrespects that, then it's gonna keep going past it. Uh, if not, then you'll see that it keeps rejecting it. So you had multiple entrances here, so you could have taken that entrance down to the halfway, and then when it came down, took out, rejected off this, you could have rode it back up to into this bearish order block. I wouldn't have fully done that because like I said, you don't know how far it's gonna go. Um, you're using a bullish breaker, but you don't know what an order block is? Golly, son. Bullish breakers confuse the shit out of me, but order blocks are easy for me. That's funny. It's the opposite way for you. I struggled with order blocks. I struggled with breakers. I had an easy time with order blocks though.
I was
So
actually talking to Beasel about that yesterday, but it's like depending on who teaches order blocks, everybody kind of like draws it a little bit differently. Like the way you draw
everyone
it
has a
is,
different,
yeah, like you draw it the way that Justin Werling guy draws it, and I've seen
yeah.
like other people do it differently too. So
People
like,
do it. You'll get it. You get a different answer from every person you talk to. But yeah, so you saw we respected this bullish fair value gap on the 5 minute. So I mean, of course, my entrance would have been around this area. I never set your stop loss right outside. I always would do a few dollars down because I mean, the market loves to collect liquidity, and it will literally just tap right outside that fair value gap because the market knows where your orders are, and your stop loss is liquidity in the market. So don't ever forget that. And market makers know where your stop losses are. They know that everyone's using a fair value gap. They just don't know where their stop loss is on that fair value gap. So they can push a price just barely past it to take everyone's liquidity, only to then push it the other direction. So, I mean, 851, I would do it typically like $5 to $10 below. So you can do 840. But that's completely up to you. Some people, what they'll do is they'll look at the fair value gap, try to find a low that's underneath the fair value gap, and they'll put their stop loss next to the nearest low, which would be these wicks that are right here. So you can do that. It's completely up to you on that decision. And then you could have ridden up, take a partial here, take a partial here, and then when you notice that I was failing to take buy side up here, then you could have just gotten out of the trade there. Now, me on the other hand, I would have entered around here, and I would have full TP'd here. That would just been me. I don't care to go the full ride. I'd be happy with that move because that's from 857 to 924. That's a $70 move. One contract that's over $1,000. Two contracts, you're looking at over $2,000 right there. But that's on minis. Micros are a little bit different. You'd probably be looking at maybe $600 if you did 10 contracts. I think. I'm not sure. It's been a while since I've done minis. Now, you would then notice that it was failing to take buy side. That's up here. We can drop back down to the 1 minute. We can look at that just for confirmation. Why does it keep taking me all the way over here? Okay. So, fail to take buy side. There's your next opportunity to take shorts. Now, what I would have looking for in this particular instance is if the market goes bullish, you want to see it take sell side first. Where's sell side in this area? Right here. What does the market do? Comes down, takes sell side. As it was coming down, it created a fair value gap. That's right here. You want to see the market then, after taking this sell side, come back up and play into that fair value gap and respect it. It's confirmation that the market wants to go down further at that point. So it came down, took out this sell side, came back up, played into this fair value gap, respected it. Your entrance could have been right there, and you could have targeted. Honestly, I mean, you would have had to set major decision. What I would have probably done in this instant is I would have pulled out my fib, gone from this high to this low. Oh, someone left. Riz left. Son of a gun. That's not the right one. Um, there we go. And look at that. I mean, honestly, that's beautiful. Look how it literally tapped into that area. I mean, like, I couldn't complain with that. Oh, wait. That literally touched it perfectly. Oh, and I have it too far past it, so. So you could do it to the halfway point and set your stop loss right there, your target right here at the 50% mark. If you really wanted to go the full distance, you could have, and you would have won that trade. It'd been awesome. I'd been proud of you. I mean, you can see how it played into these fibs perfectly too. I mean, it came down, touching all of that. Now another thing you could have done, you could have targeted this volume imbalance that's right here. You got a volume imbalance that's right here too. So you could have targeted these two volume imbalances and then called it a day after that point. Now, that would have been your next opportunity. So you have this one at open, take the 50%, came down, respected that 5 minute fair value gap, bullish one. And therefore, you could take a long back up to here. Yeah, I would have set your target, your TP right here. It got back up into this bearish order block. You would have noticed that, hey, it failed to take buy side, which you got buy side right here, which it failed to take. And it's also got buy side up there. Now, if it really wanted buy side, it wouldn't have just stopped there. It would have gone all the way to here and would have taken that. More than likely, it would have came all the way to here. But it failed to take buy side. So, and it bounced off the 50%, staying under it. there's your next sign to go short. And so what would we have done? We could target this, just this fair value gap. We could have targeted this volume balance, any one of those. And so you could have wrote it back down. Now we got to hop back to the 5 minute to see why we rejected right here. Now you can always do the 1 minute, but like I said, looking at a 1 minute kind of can take a little bit longer. And when you're in the middle of he's back. When you're in the middle of the live market, it can just be a little bit too much going on at one time. So, and there's your answer. Oop, got this fair value gap that is right here. So the market came down and tapped into that. You do, though, on the other hand, you even have a bullish order block that's right here, too. So, what do we got there, Mike? We got two confluences. Ain't that a beauty? So it respected this bullish order block, and it also respected this bullish fair value gap, tapped into the two of them. What could we have done from there? We could have taken a long position. And I know it's easy to say all this stuff because it's already happened. But this is stuff you want to be able to draw out as it's happening. Now, from there, where do we have an inefficiency above? The only inefficiency we have coming back up is this fair value gap right here. So after we respected this area, we came back up, tapped into that fair value gap. Now you're I'll check that in a second, Riz. I love your chart though. It's beautiful. Um, the only inefficiency we have as we're coming back down is this fair value gap right here. So as you can see, we came up, tapped into it before we came back down. Now your TP could have been here if you really wanted it to. Um, or you could have set a partial right here. Move your stop loss at that point. Now, if you really wanted to hold through on the trade, I mean, because you would have then seen that it came back down, failed to take sell side. So what's going to happen next? It's going to take buy side. We took buy side right here. This is a minor buy side. We came back up and we finally took the full sell side that I was telling you about with with this area right here with all the relative highs. Therefore, you could have been out of the trade right here. Me personally, I would either gone for this fair value gap or I would have gone for this high. My partial would probably have been here, honestly. Once I took that partial, I'd move my stop loss up, and then my full TP would have been that high. That's what I would have done personally. Now, the market came back up. Yes, it did take buy side. Failed to close through that order block once again. That is playing with. And then, I mean, even if you look at this too, you do have an inverted fair value gap that it's in. What sucks is it closed through it, so that person would have been faked out hard. That sucks. I hate when that kind of stuff happens. But so your primary tool in these trades would have been this bearish order block. You would have seen that it failed to take it. Once again, so you could attack sell side. You could come for this order block that's right here. That could have been your target. That would have been a short scalp. You could have also gone for this one too, because those are inefficiencies that you have. So it came down, tapped into that. That could have been your full TP. um, so those are two targets you could have taken right there for you. Then we just were followed with consolidation. We failed to take further sell side, so we came back up for buy side. We took this buy side. Once again, we tapped into this bearish order block, bounced off the 50%. That's a beautiful sign to go short. I would have waited for it to take this sell side, and then you could have entered. So there's a few ways you could have done this. That's not it. There it is. Once I saw it close through half 50% of this wick, my stop loss would have gone above this high, and I would have targeted this low. So that would have been my sign for an entrance. Um, Now, another entrance you could have taken on this is you do have an inversion right here. So you would have seen it close through the inversion, came back up and played into it. It respected the 50% literally almost perfectly. Um, your entrance could have been right here. Your target could have been right here. Now, did it tap into that? Nope, it did not tap into that volume imbalance. Now, I mean, if you really wanted to target that volume imbalance because you had a high thoughts that you were going to see it, you could have entered here. You could have set your stop loss up here, of course. You don't have to set it above the high or below the low. Um, I prefer doing that because you can have some wicks that just come and take you out completely only for the trade to play out. And typically, if the market's going to continue the other direction, it will come and take out that high or it'll come and take out a low that was previous. So that's typically why I do that. But you could have targeted this volume bounce because as you can see, it finally did reach into it. It just took a little while with a consolidation. Well, you actually couldn't have because that happened at 8 o'clock. So never mind on that. I take that back. I am sorry. You could have just, I would have targeted this. I mean, that's not a crazy trade. It's 918 to 75. So that's a $40 trade. So really that's almost $1,000 on one contract on a mini. Now, not sure what that'd be specifically on a micro, but of course I know you guys run a few micros. So I've been a solid trade, honestly, set up for you. But I mean, that's from there. You just have consolidation the rest of the day. So I mean, that's basically how I would have played the day, Mike.
Yeah, thanks for going over that.
No, you're good. All right, let me see what Riz was talking about. I haven't been able to look at his thing yet.
Yeah, he was talking about there's the like where you had those order blocks and the bullish fair value gap. There's actually like a 4 hour fair value gap from Monday or something. Like the ones you had on the bottom of the chart. It was like in a big 4 hour fair value gap.
And he's got that on the 4. Do you trade on the 4 hour? I hope he doesn't say yes. I'd give you a freaking round of applause if you traded on the 4 hour. Okay, I see what he's talking about. I love your drawings, bro. That was beautiful. He drew Monday's low, all-time highs, major break of structure, 15-minute orb, fibs. I think I see a standard deviation. Could be wrong though on that one. The only thing I'm not crazy about is those blue lines that are going down your screen. I don't know how you deal with that. That bother me. OCD. Um, yeah, so that's perfect. I mean, that fair value gap that you drew up right there, I mean, that's solid. You could play into that right there, and you could have caught that low, rode it back up. But I mean, those are 2 different days, 3 different days. That's Monday into Wednesday. We use prop firms, so prop firms don't let you hold overnight. Some prop firms let you do, but through close and through weekends. But I mean, they're a different breed in themselves. I don't get why they do that. I did see a prop firm the other day, which was made me chuckle because it was like, you now no longer have a max drawdown. I was like, wait, huh? Hold on a second. We don't have a max drawdown? But then I kept reading the fine print, and it said on there that you have a daily max, a loss limit, and if you hit your daily loss limit, then you lose the account. And I was like, well, then what's the purpose of not having a max drawdown if you hit your daily loss limit and you lose the account? Like, what's that supposed to benefit? How's that going to benefit me?
Yeah, it was funny because
They're over here trying to get people.
there's a prop firm called like Top One, and they had like rules
Hmm.
like that, and like they were advertising it as like an extra like payment, right? So you would pay $150 more for the account, but you wouldn't get a max drawdown
Yeah.
on it. But then you still had the daily loss limit, so you'd lose the account anyway.
And the daily loss limit's less than the max drawdown. So like I was just like, that's terrible because like on the 150K account that I was looking at that had it, I think the max drawdown or the max daily loss. Well, I take that back because let's see, it was 6%, which was your daily loss limit. 8% was the max. 6%, 1% would be 1,500. So multiply that by six. So that's 3 6. That's 9 grand for a daily loss limit. If you lose 9 grand in a day, you shouldn't be trading. So I mean, that's really not bad. But they were charging so much for their accounts. I was like, that's ridiculous. Like I'm Gucci on that. I don't care for all that. It just made me chuckle because I even commented. I was like, so you want to tell people that they don't have a max drawdown, but if you read the fine print, there is a daily loss limit that says if you go past that, you lose the account. I was like, y'all finessing people over here.
Rug pull.
Rug pull funding. We promise to disappoint. Oh my God, where dreams go to die. Wait, I gotta click on this. 50,000 plus victims, $10 million plus money stolen, 0% success rate, 3 days average loss time, lightning fast losses, zero customer support, impossible rules. Anonymous victim number one. I lost my life savings in just 2 days, exactly as advertised. Would recommend to my worst enemies. Customer service? What's that? I've been trying to reach them since 2019. They promised to steal my money and they delivered. Finally, a company that keeps its promises. The rules change every day, making it impossible to succeed. It's like they don't want us to make money. LOL. Dude, that's phenomenal. I ain't ever seen that. Yeah. Plans. And it says get scammed. Can you actually get an account through them? Like, that's what I really want to know. Oh, I would have laughed if you could actually get an account through them. That would have been freaking phenomenal. So this is my chart currently that I got set up. Need to remove the new week opening gap. But this is currently what I got going on my chart. Oh no. Has anyone got questions? Anyone want to know something? Anyone got anything at all? Like I said, this is ran by you guys, not me.
Hey Chris, can you hear me this time?
Yeah, we can hear you now.
Yeah, I can hear
Oh,
this.
that's
You
better.
British,
I've been
bro?
fine. Sorry?
Scottish. Are you Scottish?
No, I am in London.
Oh. Oh, so I was right. British. Yes. Right?
Yes, yes.
I
Well,
was right the first
uh,
time.
yeah, I was expecting you guys going to start session around 5 o'clock London time, which is a 5 hour difference from your Eastern time. So, well, it doesn't matter. I caught you later on. That is fine.
Oh,
Well, in terms of,
I started
yeah.
at 11.
Yeah, that was a four
I
o'clock
thought
London time, so
Yeah,
1 hour
'cause you
earlier,
know
I
yeah.
why it's
believe.
because we have that time
Yeah.
change, the daylight savings, whatever they call it.
Oh, I see. So I wasn't aware about that. So anyway, uh,
It's all good, bro.
unfortunately, yeah, unfortunately, I had a issue with my microphone, so I had to switch over to my iPhone so I can communicate with you. Actually, the chart which I tried to share with you. Basically, I take my entry based on 4 hours candle. So I want to see the influence.
Yeah.
I mean, the bigger picture before drilling down into smaller candles. That is the way. Basically, I am fib based, trader.
Hmm.
So I became aware about ICT concept. But again, I look into fib details. If you look at my chart right now, the market are parked at zero point 0.5 fib from Monday low to all-time high. If you see, market is at the moment is undecided whether they want to go down or whether they want to go up. So
Yeah.
if you see Monday low, which is 780, I see order block or fair value gap. So I suspect there might be some catalyst. They might push market down so they can grab those liquidities. So that was the idea showing that chart. Obviously, market will visit those areas and then might go up. So don't forget this week we have another big event coming through. I believe Fed chairman is going to speak. So that might be the catalyst to visit those areas and then
Yeah.
bounce back. Yeah. So this is what I was trying
Yeah. We
to
have a.
highlight. Yeah.
No, you good. Finish what you're saying.
Yeah, that was the reason to highlight. Otherwise, uh, you explained all those details very well. So I've been following your trades. So I basically counter check all these entries from fib perspective. If you look at my chart,
Hmm.
uh, uh, you can see area around 22,580. If you see that
Hmm.
is a 1.6 18 fib extension toward the
Hmm.
downside, the most likely the markets will visit this area. So this is why I
Yeah, I
have
can
to
see it too.
show all, yeah, this is why I have to show complete extensions. And so we can see what are the possibilities to visit downside. So all these algos, they basically use fib, and I've been using fib for a long time. So most of the time, the fib accuracy is very good. But
What I
anyway,
love is
yeah,
if you look at my screen, I got four
yeah,
hour relative lows and
yeah.
regular relative lows at 583 and 545. So that's why I could definitely see that happening.
Yeah, absolutely. So I stop here. I will listen to you. So I will be quiet. Okay. Thank
Oh,
you very
dude, no, you're
much.
good. You're fine. No, you're fine, dude. I love people sharing thoughts and opinions and talking. Um, yeah, no, we have a
Yeah.
lot more sell side liquidity below than we do above right now. I mean, I definitely want to see the market revisit that some lows before we go back up into all-time highs. I really don't like trading all-time highs because it's just. I'm sure you do because you love your fibs, but I hate fibs unless I need to use them. I like
No, that
seeing my
is
liquidity.
fine. Honestly, that is fine. There's nothing wrong as long as you are making money. That's the idea. Some people use ICT, some people use FIB, and I have seen some traders who use Elliott waves and they're swing traders.
Yep. Well, I
So
don't
I
hate
was,
fibs. I just
yeah,
I prefer like my liquidity over fibs, but fibs are freaking beautiful. I mean, they run in such perfect harmony with the market. So that's why I love fibs. It's just
uh,
I use buy side and sell side and high relative highs, relative lows, equal lows more than I do fibs, just because they work for me more and because I've traded them more. But I love fibs personally because I mean like
yeah.
let's see, I'm trying to remember the day. One day, I think it was, yeah, like look at this, because I took a video, a photo of it. I think it was,
Yeah, let me share some information why I use FIB. My background is basically in programming and computing side. So
Yeah.
most of my friends, they are programmers. So they
Hmm.
done programming as well. So all these algos, they use fibs. So that is the reason behind it.
Hmm.
All these algo trading is happening. They are utilizing fib. A fib could be for larger trades, it could be smaller trades. If you look at these candles, and you will notice how beautifully they land on those fib ranges.
Hmm.
So, I mean, this is just only a information if anybody want to dig into those details. But yeah, that's how I came to know. So anyway, that's fine. So I will be
Yeah,
quiet.
like
I'll-
dude, good. Like yeah, see here you go. So if you use this fib market from this low to this high, I mean, look how these days played out right here. They literally tapped into it perfectly. Like I couldn't ask for anything better. Like that's gorgeous. And I drew it from here to down here. Um, and then like that just played into it perfectly those days. Like this day, this was Thursday. We rejected off of this spot exactly and came down. It was beautiful. I couldn't ask for anything better than that.
if you
That's why.
switch your yeah, if you switch your chart to weekly candle, look at that where we are standing. So if you draw from Monday low, which is 7th of July, and
Well,
the low entry should be, or you can look into my chart and change your candle pattern to 1 week, and you will see we are standing at zero point 0.5. So we are basically in the middle. How we
hmm.
started Monday's trading, we basically bounced from Monday's low. We done a whole visit to all-time high, and we basically pulled back down to zero point 0.5 fib level. So we
Hmm.
are basically, market is undecided whether it's want to go up or they might want to visit lower ranges.
Hmm.
So, and if you switch your chart to 1 week, you will see very small doji candle, weekly long doji candle. So that
Yeah, no,
shows market is totally undecided.
yeah,
But
no, I
anyway,
love Fib.
yeah, that's my way of looking into a market. Some people have different views, and I was doing a swing trade based
Hmm.
on options. So
Hmm.
last year I switched over to futures. So
Hmm.
since then, I'm hooked to futures. I'm not doing
Same.
options anymore.
Me neither. I've stepped
Yeah,
away from options. I love options though. Still, the end of the day, they were fun. A few guys in here used to were in the
yeah.
group chat that I was in.
I used to do SPX and SPY and future options. So I have utilized all variety of different strategies, butterflies, broken butterflies, anything you name it. I have done extensive work on those, but I cannot control Greeks. Nobody can control
Yeah.
Greeks. So they are basically, you can say, biggest enemy of traders if you don't know how you are going to play with the options. But anyway, I
Yep.
find a home in futures, which is, controllable. So
Yeah.
anyway, that's fine. So yeah, I love to share knowledge with others and I love to learn from others as well. So yeah, I would appreciate if anybody want to share their input. So thank you.
No, thank you, bro. It's good to hear from you. 'Cause we talked a little bit. Yeah, like you can see here on this weekly fib that if you draw it from this high to this low right here, we rejected off the -1, 2371. And on it, we could go back and revisit 696 and see what happens from there. But no, fibs are pretty powerful. Especially since you work in computers, you know that too. Stuff's cool to me. I just love how knowing how this stuff works. It always intrigues me. Well, guys, unless y'all got questions, that's about it for me on the day. Oh, yeah, sorry, my dude. I meant to go through that. Forgot you asked earlier for it. Okay, so a bullish order block, and it depends on what color candles you have. Everyone uses different color candles. I like green and black. Red is not the best color to use because our brain, psychology wise, views it as a negative connotation. So I do black instead. Um, Red can kind of play into your emotions in a way. Um, so a bullish order block is typically, um, let's see, crap. I always tell myself it backwards in my head. So a bearish order block is typically green candles followed by two or more black candles. And then a bearish order block a bullish order block is typically black candles followed by two or more green candles. So like you could use this. Oh, there's one. That's perfect. Literally as I said that. So you got this one. So these three candles, these three green candles, followed by these black candles. Two or more black candles. There's three right there. That's a bearish order block. Notice how it played back up into it, rejected it, played back up into it again, rejected it, and went back down. Now, and there's another one. Freaking awesome. I love when this happens. It makes my life easy. Never mind. Doesn't make my life easy because that close through it. Go to a higher time frame. There's no way to really know if an order block's forming. You can use an order block after it's already formed for you to use in the next setup. Um, there's no way to know specifically if it's formed. Oh, look at that. That's perfect. So you got your order block right here. Um, so say this candle formed and then you had two or more black candles form after that. Well, then you could use this as an order block, draw it up. That way, if the trade plays back into it, well, now you got this already drawn, so you can use this to play into your next trade. Um, but there's no way to be able to use it before, like, there's no way to know if it's forming until it's already formed. Then you do have bullish order blocks too, so let's find one for you real quick. Go. Bullish order block. So two black candles followed by two or more green candles. Market went up, came back down, played into it, and then continued on. So there's a bullish order block. Does that help? Giant, does that help? What do you mean about swing low back to the one that I drew? I wouldn't want to trade this. This would not be a trade I would take. That's too. That's too short-lived unless you're a scalper. That wouldn't be something I would go for. I'd want to see. So you got. You talking about where the blue is? You got a bullish order block here, but it doesn't get played back into. You got a bullish order block right here, which it does get played back into right here. I mean, these candles are so small, I wouldn't mess with it. It just wouldn't be my thing. I think the move had to be sudden to consider an order block. Yeah, I mean, typically my preferred order blocks are gonna be something like this, where you have a pretty decent move into it. So like what you could do is, as you see right here, we have this buy side that's right here, so you can draw out that line. So what happened? The market came up, took buy side, right? And that's what we want to see when the market goes bullish, right? We want to see it take buy side and it come back down and it play into an order block, a fair value gap whatsoever, and then we have continuance. So what did it do here? It took buy side, came back down into this bullish fair value gap as well as this bullish order block, played into it. There's two confluences right there, so that gives you a higher probability to the upside. What do we do from there? Well, what's the next buy side target? We got this one that's here. Sucks is I'm pretty sure that might have been the first time we had all-time highs. Yeah. So for you in this instant, you'd have to fib it because we don't have any more buy side we could take really here. Now, I mean, if you did that, you could take. Uh-oh. Did I just lose it? There we are. You could target this high that's right here. I mean, it's really not much of a move, but you also take a fib to it as well. So, I mean, look at that. That's beautiful. You see it came and it took the buy side that we drew up.
Wow, you got one nice candle that just went from that high right to that point 0.5, I think it is. That point 0.5 fib level you have drawn
Right
out.
here.
No, like the one below that. You got like
Oh,
one
right here.
candle just went straight up.
Yep, and just gorgeous skip and just went straight through all of it. And then it came back down, played back into this order block right here. It came back, played into this next fib level, played into this next fib level, played into this next fib level, and then you could have taken profit right here. Or if you saw it begin to reverse, you could have gotten out in this area. I mean, it played beautifully through there. I love that. Love seeing that kind of stuff. But yeah, I just drew it from this high to this low. I mean, you could also draw it since it's already happened. If you're looking for a long position, you could draw it from this low to this high, and then now you're waiting and you're watching to see how it responds to this area right here. Because I mean, look at that. Then it came up. We took this out again. Took this out perfectly. Came back, played into this order block, came back up, and we touched this all perfectly. Came back up, and we failed to take that. And then you start seeing the reversal happen, so you could probably get out around this area. But of course, I mean, let's see what OTE looks like. I wonder what an OTE. Let's see. I don't know why I did that. These allow you to take short positions. Yeah, I wouldn't want to use an OTE on that. I'd use STD. I'd use standard deviation because that played out beautifully. That's how I would have done that. Because once you get into all-time highs, you got to start using standard deviation. Like you're not going to be able to. You don't have highs and lows. I mean, you'll have lows, but you don't have highs to be able to watch and try to attack. But you'll have lows you can do. Once you get to all-time highs, you can only use standard deviation. Otherwise, you're just hoping that the market goes as far as you can, and then you get out at the right time. But yeah, I mean, that's a perfect trade in itself. You had that order block be created, you have the fair value gap get created, plays back into it perfectly. You take your entrance around here. I'd set my stop loss like down here because otherwise that's what 879. It's a $25 stop loss. It's $500 stop loss on a mini. That'd be a $50 stop loss on a micro. Um, and then you can set a take profit, partial here, partial here, partial here, and then you could get out around here. If there was a wick in there, would we consider the order block high or order block open? You mean the order block closed or order block open? What do you what do you what do you mean by that, bro? Mike, you got an idea?
I'm guessing he wants to know if like you count the wick as part of the order block when like you draw the box out.
Yeah. Yeah. So when you draw the box out, you're using the wicks too, if that's what you mean. I'm not just using the body of the candle, I'm using the wicks as well. Sweet.
Yeah, it's like a lot of the new people like they're really young, they're doing futures, they just use the body for some reason.
Yeah, same. I use the wicks too for fibs. I don't know why people just use the body. It's confusing to me. Um, Anyone got any other questions? Cool. Well, guys, it's 1 o'clock here. Um, if you missed anything, I think Mike probably recorded it, so I'll post
Yeah,
it in the
it was
lessons if he
recorded.
did. Cool. So if you missed the beginning, Riz, you can watch what we talked about in the beginning. Um, if anything, I'll just go over it real quick. Because we just did a weekly recap, which is about when you joined. But before that, we talked about the trades I took on Friday. Oh my lord, Still going. So on Friday, Riz, what I was telling them was right when the market opened, I drew out the opening gap, and then I wanted to see how it responded when it got to the 50% mark. As you can see, it almost reached the 50% mark, but it didn't. So I attacked 881, which is right here, as my target. Got to go back to regular trading hours. It's doing it again. Yeah, there it is. So I attacked 881, which was this low that's right here, because we failed to close past the 50%. So that means it was going for sell side. But we also took this buy side that was right here, right at open. So we took buy side, which one confirms that now we're going to go to sell side, but two, we also failed to take the 50%. So that was confirmed. Those were two confirmations that now we were about to go down. So I took a short right here on the very second candle because the second candle didn't even was unable to reach any further than the first candle. So I took a short on the second candle, attacked 881. Now from there, we did have on the 5 minute a order block that was right here. And it respected that order block, a bullish order block. Now, pre-market, before the market opened, I had drawn out inefficiencies that we hadn't tapped into yet. And so the inefficiency we had above was this one right here. We hadn't tapped into it. So after I took that short down to 881, I waited to see how it responded to that order block, which we respected that order block. So now it confirmed to me that we didn't want more sell side. So I took an entrance and went long up to the inefficiency that was right here. So I took the short, then the long, and then I was done the rest of the day. So those were well, no, I wasn't done the rest of the day. I was $100 short off of each account that I have. And so I waited for this drop afterwards, and I got in and out for a quick scalp on $100 on each account. But those were the three trades I took that day, and then I was done the rest of the day. But that's basically what we were talking about before you joined the chat. Outside of that, though, if there's anything else, then it's in that live recording. But if anyone doesn't have any other questions, I need to go eat lunch and get to the gym. Um, I'll throw it out there one more time. Any other questions, you guys, before I hop off?
Yeah,
Yeah, of
thanks.
course,
Thanks
my
for
dude.
doing the recap league. It helps a lot.
Yeah, yeah. Make sure y'all do that because it teaches your eyes how to spot things. It's really helpful. Um, if you have any further questions that you think of, because I know that sometimes happens, like once you get off from, once you're done doing whatever it is you're doing, sometimes you're like, oh crap, I meant to ask this. Feel free to just message me. If you want to do a one-on-one, I will try to get you on a schedule to do one with me, or you can just talk individually if you're struggling with something or need help with something else. But outside of that, guys, I hope y'all have a blessed weekend. Let's have a great week in the market this week. I won't be on really this week. I got a lot of stuff I got to handle with um, personal training that I'm gonna start up doing, just as some extra income, side business type stuff. I'm trying to start up an LLC for. Um, so I won't be on too much for trading this week. I'll be on Wednesday though. But outside of that, guys, you all have a wonderful week. Reach out to me if you got any other questions, okay?